Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having an amazing day. Happy Tuesday to you. Hope you are safe and well after the holiday weekend if you're in the States. If not, thanks again regardless of, being an awesome valued member and subscriber, etc. The whole 9 yards. Greatly appreciate all of your support. That goes to my community members as well as my subscribers. But furthermore, too, if you're not currently a community member, consider joining. I do have a trading academy community and signal group where I teach you how to trade. I send out signals for every single trade that I take, and we've been making a pretty good killing here recently. We caught a nice part of that Bitcoin increase yesterday, and now today closed out on that trailing stop loss. Felt really good. So that being said, we're going to take a look, of course, at Bitcoin, help understand best practice and big picture, and get you on the right track, hopefully, to know what to do next. So let's take a look here. So what we typically like to do is look at the monthly and work our way down. So what we'll do here first is start with the monthly and kind of see. First things first, these lines here I have are specific key level resistances from previous trading years. In other words, back in 2017, roughly 4 years ago, we had like an all-time high at about 20,000 or 19,800. That level just recently here was in fact tested and held barely above. Now we had some last minute manipulation in the markets, of course, to close there, but generally speaking, with the monthly closure above 19,800, that key level support, that does imply that that may be the lowest point, which we'll see. Again, maybe, right? That's the general consensus. But to be completely honest with you, we are underneath the 50-day set moving average, as well as, of course, the 20. But more importantly, when we're underneath the 50, notoriously, when we've been underneath the 50, you can see here, it was only one instance during COVID. Okay, so we're kind of in uncharted territory because last time we saw this, which is when the price broke down below the 20 and tested the 50 essentially, the price recovered within 3 to 6 months. Not to say that won't happen here, but we're definitely looking lower than we were at previously. So unless we get a monthly candlestick close to this month over, just say 22,000 is a round number, then we're going to probably see further downside, or it's going to hold underneath that level for perhaps longer. So just something to kind of be mindful of. Again, it's hard to say honestly which way we're going to go, but if you look at the most recent past, again, this is not looking back 4 or 5 years ago, just in the last year or two, we can see that every time we have 3 red candles, it's followed by 2 or 3 or 4 green candles. So again, no guarantees in that, but that is a candlestick pattern nonetheless. So in that sense, hypothetically, we could see a green month this month. Okay. The very worst, I would like to see a doji candle close this month, give us that indication that we're likely going to be able to see a turnaround perhaps soon. All right, so that's kind of just generally what we're looking at there. And of course, standard stuff here, we're under 50 on the RSI. So if we can get back over 50, that would be a very good start, good help. But in most cases, if you kind of look at the price action here, you can see that 50 on the RSI is very much concurrent with the 50-day set moving average. Okay, so we're going to get back up above either or both to have a good shot at coming back. I do personally feel like we're going to see a green month, but there's a decent chance we might see a candle wick lower first before we recover. That's just my personal speculation, but once again, the charts are telling us, the big picture, we're still in this declining market, and until we can go sideways at least a couple more months, we're probably going to be in a very similar situation. We're likely going to be range bound between, just say, as low as 14,000, upwards of just say 24,000, kind of a round number there, but generally speaking, we're going to probably fluctuate in this range for some time. It's just going to kind of go sideways until it breaks above, and then we might actually see a continuation higher. For now, we want to expect the worst and hope for the best, and just note that we're probably going to continue to go at least sideways or down in the general sense of things with slight recovery periods. And we'll talk about that here in a moment. So we're under 30 on the RSI, not really a great sign. Of course, we've got a pretty significant MACD divergence here. We've seen this happening for quite a while here, ever since we saw its peak last year. So again, in general, things are not looking fantastic on the weekly either. We're underneath the 200-day set moving average, and that's another moving average we want to be back up above. Again, underneath all 3 moving averages. So in time, we might see the weekly test the 20-day set moving average, but that's going to, again, run concurrent with this descending type of trend that we're seeing. And overall, in that sense, we can expect that to continue to hold until we break above, right? Take a look at the daily, though. Here's kind of what we're looking at here, of course. With the daily, when it comes to this here, we can go ahead and see down below, of course, RSI is, well, it's recovered, but it's also retesting that level. At least we saw a retest of 30 on the RSI here recently. Didn't technically get a close below, it kind of bounced. It came up, and now it's kind of wanting to look like it wants to retest again. It's a great chance we could very well see this bear pennant pattern come to fruition and essentially squeeze out to the downside. I do think that's more likely than we are to see a break to the upside, unless, of course, we get a candlestick close right around 21,500. But just here yesterday, we saw the price wake up to 20,500, which is another previous support and resistance level, and it just got rejected. Okay, so again, we have a lot of selling pressure between 20,500 and 21,500. That's a very strong resistance channel, and we need to respect that until it can break back above. But in truth, though, I think the likelihood of seeing the price action go down is higher than it is to go up, just based on this bearish pennant pattern, as well as a myriad of other factors. Okay, so just be mindful of that. We also have, we got a couple weeks, of course, before we see that, but I think we're going to have some Fed meetings later in the month. We want to be mindful of how that responds too. Take a look at the 4 hour. We can really see here that the 20-day set moving average is essentially working as a nice little support level here for the moment. So that could very well imply that the price action might want to continue to try to go up higher here and retest this descending trend. Okay, so just keep that in mind. Also note as well, 19,800 was a previous resistance. We got a doji candle there and it broke to the upside and effectively retested 20,500. So we'll see here soon if we can break above 20,500. I would say a one-day candlestick close above 21.5 would be a really important sign to imply that we've broken this bearish pennant type of pattern and to effectively help, kind of get out of that rut. For right now, we have to expect the price to break to the downside, not the upside, until we can get some kind of confirmation close above 20,500 or 21,500. Those are two key level areas there. So just something to be mindful of. And as we can see here, of course, RSI is under 50 for the moment, so we want to expect that might be working as a resistance level. We also want to acknowledge the fact that we have a MACD divergence here forming. This isn't, it isn't official just yet, but it definitely looks like it wants to diverge, so to speak. And if so, that would imply that we're going to have some bearish momentum, possibly enough to break this lower support at about 19,000 and to continue lower. I do think that's a probability. So I'm leaning a little bit more towards, just based on what we've seen here so far, the price action coming down in the relative near future versus going up. Okay, so I think it's more likely to break to the downside than it is to the upside based on the key level resistances that we're seeing right at specific price ranges such as 20,500 and of course 21.5. So we got these pretty strong resistances there. We're kind of just speaking very loud, letting us know it's not really willing to go any higher. Another thing to note too here is even though we do have technically higher lows, we haven't printed higher highs yet. So until we can print another higher high, we have to expect the price to come down. Okay. So me personally right now, just kind of waiting on the sidelines, hoping for some type of, determining factor to kind of get us there. And to me, confirmation comes in a lot of different ways, but it's usually in most cases a candlestick close on the daily, not necessarily the hourly or the 4 hour. Okay, so it is nice to see here on the 4 hour that we are seeing a potential higher lows, but on the same accord that the verdict isn't in yet. All right, so again, just keep that in mind. We're still in a position right now where we could very well see the price come down. Let's take a look at the cloud. This is another thing to also kind of factor in. If we take a look at the 1 hour here, you can see we're kind of retesting the cloud here on the 1 hour. And what basically telling us here is that it's working tentatively as a support level. Okay, so keep in mind though, the conversion line is below the baseline. That essentially tells us if you have a long position, you would want to have closed it by now. And the lagging span is essentially within the price action. While it's going to be free and clear here soon, we're still above the cloud. So it's kind of we're in this little muddled territory here right now where there's not really any good definitive signs on taking a position. It's telling us that we want to have our long position still open, but we also should have closed it by now. All right? It's kind of telling us conflicting information. So for lack of better terms, that's why I'm happy that we were able to take significant profits on Bitcoin. I think upwards of 55% on one of our leverage positions. We hit our profit targets here, came back down, hit our trailing stop loss, and now it's perfectly fine if the price continues lower. I'm happy about that because it really just helped us kind of confirm here that once we, lagging span intersected with the price action, we were able to take those profits there. So for lack of better terms, for you, if you have a position open, just say it's a long position, I would be cautious and careful in holding that, just based on the simple fact that it doesn't look like we have, it does look like we have a strong resistance at 20,500, and it doesn't look like we have a lot of support there. The overall sense of things here on the macro still looks bearish. Okay. That's why we look at larger time frames and work our way down. Okay, we don't just jump right in and try to analyze the smaller time frames, because even if you are just say a day trader, for example, if you don't know what the big picture is looking like, then you're really going to be doing yourself a disservice. So again, those are all things I teach in my trading academy, but for the most part, it's safe to say that Bitcoin does need to have some type of fundamental catalyst perhaps to drive the price action higher, but we are seeing higher lows on the macro, or the micro rather. So if we establish a new higher high, I think that would be a case in point where we'd probably be in much better shape. Because again, a closure above 21,500 would not only break a significant downtrend like we're seeing right now with this bearish divergence, but also would give us the inclination that we're above a key level resistance, and a candlestick closure above that would be fantastic. And just to kind of drive this home here, if you look at the daily, you can kind of see here that there's a significant line right here at 21,500 where the price action is having trouble breaking above. It tried 3 or 4 times to break above, couldn't. Okay. So what that basically just means is if the price action comes back up to retest this level, it'll either reject and come down, which would confirm kind of this bearish pattern, which I think will probably be a strong likelihood, or it comes up and it breaks this level, for example, and then it comes up above this key level resistance. So a closure above 21,500 would be perfect. We get the price to come up here, then we can probably continue to come up and at least retest this trend line here. Okay, but it would give me a lot more comfortability in taking a position if we're above a key level resistance, obviously. And I'm referring to a long position too. Right now, I would say a short position is potentially likely more viable, but again, we don't have full-on confirmation either. Cloud's not telling us a darn thing right now. So in this case right here, I mean, honestly, I know it sounds difficult because sometimes you're looking for answers or entry points, but sometimes the best trade is no trade at all. And to me right now, I think that we should be kind of cautiously optimistic and let Bitcoin kind of choose a direction when we're kind of right in that little transition where we're not quite sure which way to go. So to me, it's better off, waiting for, at least the one-day candlestick close to kind of see where we're going here and kind of help us understand that big picture. Because we do have essentially a double doji pattern here, which is good. That's positive. That should imply that we're going to see more upside. But again, we're still in this descending type of trend, this bearish type of pennant pattern, and they commonly break to the downside. So I do think we have a little bit more factors telling us that downside is more likely than the upside. That's just kind of the general sense of what I'm seeing here. So again, a lot of little things to kind of factor in, but I would say that we're not in dire straits like I've mentioned many times before. It's pretty standard stuff for Bitcoin and bearish types of situations. Okay, just do not expect a swift recovery. It's going to take a little while before Bitcoin builds a strong volume and a base, and then inevitably will take off again. Between now and then, we got to protect our investment and use good risk tolerance and make sure we're not position sizing too large, because honestly, that's a big reason why people get wrecked. I get a lot of people that come over asking for help, of course, and getting their portfolios back on track. And I can tell you that the key to doing that is to not revenge trade and try to make your money back if you've lost it. Most everyone's in the red right now. Okay, it's just kind of the way it is. But the smart investors, key takeaway here is investing. They're investing at the right time. And the best time to invest in anything is really when the prices are down and low. And to me, even though we could see further downside, 20,000 is still a good value for Bitcoin. Once again, I'm just dollar cost averaging $20 a day into my portfolio. Really simple, easy transaction. It's just kind of fully automated. I don't have to worry about it. It just averages my price down. Okay. So I'm cool with the price going back down because I'm slowly putting money into the market. Not everyone has that opportunity, I get that, but if you do, please make sure you take advantage, because prices like this will never be seen again if and when we see the price, of course, Bitcoin recover in the next couple of years. Not saying it's going to take 2 years to recover, but there is potential, I would say, at least for 3 to 6 more months of the price action being roughly where it's at. And if history repeats itself, we should experience, November, December timeframe as a much better situation where the price action is coming back up. Traditionally speaking, that's usually what happens. All right, so anyways, that's kind of where we're at there. I hope that this made sense and you can get clarity from it and hopefully answered some of your questions and didn't provide more. If you do have questions, of course, feel free to reach out to me. I love hearing from my members, my subscribers, pretty much everyone, of course. I will reply to you, but make sure you use the right contact information. Only use the contact info in the comments below. I'm never going to WhatsApp you or try to solicit you. That's just not what I do. I'm above that. Really, it's just terrible that people actually do that. But regardless, that's conversation for another day. Thank you so much for joining me here. Hope you have a great rest of your day. We'll look forward to getting to work with you in the future. Have a good one. Take care.